Are your savings stagnant no matter how hard you work? Make money work for you with MIDF Invest, an easier, safer way to grow your wealth by investing in stocks and ETFs from over 6,000 US companies. The bank is regulated by Securities Commission for your peace of mind, so you can keep your money safe while keeping it busy.
Hi, let me show you how easy it is to buy a stock from the MIDF Invest app. To start, download the MIDF app from the Play Store or the App Store. Registering your account with us will be very easy, and once your account is approved, you can click the trade button to begin your investment journey. Search for the stock that you like to buy, customize your stock buying options, tap on the Place Order button, and finally tap the Confirm button. And congratulations, you have purchased your first stock on the MIDF Invest app.
Want to earn from some of the world's biggest companies? Let your money work abroad. With MIDF Invest, you can invest in stocks and ETFs from over 6,000 US companies, including a wide range of Sharia-compliant stocks. Have questions? You can talk to our experienced happiness agents anytime. So, if your savings are still sleeping on the job, it's time to make them work a little harder.
Hi, and good evening, everyone. Welcome to the MIDF Invest Webinar Series. Let me just put on the slides. Okay, so I'd like to wish everyone a warm welcome for today's webinar. Today's webinar, I think, is going to be relatively special. I think it's going to be very special. I think a lot of me and the research assistant, we wanted to figure out what's the best way we can help you guys in your investment journey. And what we came up with, one of the titles we came up with was this, how to invest your first 1,000 ringgit, right? And how we actually structure this particular webinar is it's going to be two parts, right? Today is going to be introduction. I'm going to do some introduction of certain concepts, right? And then the next webinar, we're going to get into the strategy, right? So this week, we're just going to go over, very basic concepts. And then after the next week, we're going to drill down within this particular theme of the webinar, right? So I know there's a lot of newbies right now. If this is your first time, welcome to the MIDF Invest Show webinar, where we actually have this every once a week, right? Same time, 8:30 to 9 o'clock, right? And if this is your second time or third time, right? Welcome back, right? So just out of curiosity, if it's your first time, please do type number 1 in the chat, right? And if it's number 2, please, or this is more than your first time, maybe the second, third time, right? Please type number 2, right? So, before we begin, just a quick introduction. Thank you so very much, Pat Winder. Thank you, Pat. So, before we begin, allow me to do a quick introduction about myself, right? I've been working in the financial industry for close to 20 years. And in my time within the financial industry, I worked as an accountant. And eventually, I started working in investment banking, right? During my time as an investment banker, what we used to do is to find good stocks at a very cheap price. And how an investment banking firm actually works, or how an asset management firm works, is that they buy stock very cheap and eventually sell it for a much higher price. And if we can find really, really good stocks, right, this is how we make profits, and this is where the firm, and also is profitable, right? So that was what I used to do. And I was the analyst. So I was the front-facing guy, always trying to find really, really good stocks out there. And today I'm doing a customer outreach, right? So, and I'm sharing ideas with you guys, right? So I think just to recap why we do what we do, right? Is basically this, right? By me sharing knowledge and by us learning, right? This will enable us to make knowledgeable decisions, right? And when we make more knowledgeable decisions, this will enable us to get better profits. And when we can make better profits, this will enable you to have a more fruitful financial journey, right? So that's one of the reasons why, even as a financial analyst, I used to love to go for a lot of these webinars and whatnot. Different analysts have different ideas, right? And it's up to you guys. You guys listen and say, "Oh, I like this analyst," right? And then from all of these webinars, make a decision. And with better decisions you guys make, or with more information that you have, you'll make more informed decisions. And this is where you can make a small little profit, right? So we just to recap, we talked a little bit about this last week, right? Whereby for savings, right? We talked a little bit about the 50, 30, 20, right? I talked a little bit about how do we even start investing, right? So I talked a little bit about the 50, 30, 20, right? So last week we talked a little bit about once we get our salary, 50% will be for our needs, 30% will be for our wants, and 20% will be for our savings and investing. Right? Let me repeat this again, very important. Once I get our monthly salary, how much do we keep aside for investing? Right? It's basically 20% of the overall salary, right? And this is famously, I guess, coined or famously always being said in the Rich Dad Poor Dad book. One of the ways to actually become wealthy is by investing in ourselves, right? And that 20% fund is investing in ourselves, right? Or it is to start investing. So amongst the savings or the investment fund, I talked a little bit about breaking it further down to another 50, 30, 20, whereby 50% I would highly suggest to be invested in ETFs, right? So last week we were talking about this, right? I was asked this question, what are ETFs, right? So this episode, we're going to talk a little bit about ETFs. So basically, ETFs in a nutshell is this, right? ETFs is when, say, number one, I have a little bit of money. Say Mr. B has a little bit of money, and maybe Mr. C has a little bit of money, right? So what ETFs are is basically this. We kumpul all do it, and we put it in a small little tabung, right? And then this little tabung will start buying up little assets, right? And if we were to look at it in a more financial lens, right? This is how it is. Investor 1, Investor 2, Investor 3 will all put a little bit of money in a small little trust. And this trust will then buy different type of assets. It could be stocks, it could be bond, or it could also be commodities, right? So the green box over here is basically an ETF, right? And this little episode, we're going to talk a little bit about what is an ETF. We're going to go a little bit in depth on ETF, and we're going to talk a little bit about the benefits of investing in ETFs, right? So over here, we can see that ETFs, you can actually invest in different types of asset classes, right? This could be stocks, this could be bonds, and this could be commodities, right? And I think one of the amazing feature of an ETF is that it allows you to have diversification. I'm going to show you the benefits in later slides. On top of that, it actually helps you lower your risk, by diversifying your assets, you can lower your risk, right? And the third benefit is that it is very easily tradable. ETFs, you can actually buy it from the open market. So it trades exactly like a stock, right? So if you want to buy an ETF today, you want to sell it tomorrow, right? It's easy. Why? Because it's listed in the financial markets, right? And if it's a very liquid ETF, it's very easy for you to enter and get out that particular ETF. So that's the benefit of an ETF. It's highly liquid, right? So there are different types of ETFs, right? Over here, we can see there's equity ETF, bond ETF, commodity, currency, and inverse, right? We're gonna get even deeper within what all of these means, right? So not to worry, right? Not to worry. So the first ETF, which I'd like to show everyone, is a bond ETF, right? Basically, this ETF actually buys a whole selection of bonds, right? And as I mentioned in last week's episode, right, one of the best ways for investors to actually buy a particular sector, assuming if you like the electric vehicle sector, right? And at that point in time, we could see a lot of small cap electric vehicle manufacturers, and also there's a Tesla, right? And the question arises, which one is the best pick amongst all of this? Any day, I will say buy an ETF, because an ETF will give you a diverse portfolio of all of the EV makers, right? So over here, the same concept can apply, whereby if today we are very new in the financial markets and we want to start investing, right? And we want to retire, assuming if any of us are already maybe in our 50s, right? Or maybe 60s, right? Where we don't want to have too much of volatility in our portfolio, right? And we know that bonds actually gives minimal volatility, right? So this is an idea over here, right? You can see that it actually went up from 80, it went up to 87, and then went up to 70. It's not too volatile, you go by maybe 10, go up by 10, go down by 10, right? The whole thing of it all is we are not there for capital gains. Bonds, one of the reasons why we are investing in bonds is that it gives us coupons, or it gives us yearly income, right? So I think an example over here is, assuming right now, I used to remember when I was an analyst, I used to maybe go to very big listed companies, like Nestle, and a lot of this, I could see a lot of older people. They would go for all of these AGMs. Banyak, you see all the AGMs, you see a lot of older people. And one of the reasons why they like to buy stocks like Nestle, right? Nestle, the stock actually is very flat, does not move at all. If it's 80 ringgit only, all right? For 3 or 4 years, it's just this particular. But one of the reasons why a lot of older people like to buy big cap stocks and also bonds is that it gives you a yearly cash flow, right? So buying a bond ETF, what do you want? You want to have a cash flow from your assets. This is the first type of ETF. The second type of ETF is commodities, right? So right now, assuming if we have been watching a lot of at one time, I know over on TikTok, everyone is talking about buying gold, and and going to this bank or that bank to buy gold. But I think one of the easiest way for us to actually buy gold in a very secure manner, right? Because when you buy gold, you also have to store gold, right? And then there's a risk where you put it somewhere, right? Especially as we get a bit older, right? I know my mom and aunties and uncles, right? Sometimes they misplace things, right? And imagine that's your investment portfolio, right? Wow, sakit hati lah, right? So I think one of the things that helps is Marinda is asking, are these ETFs available in the apps? Yes, of course, yes, they are. So what you can do is, I already put the ticker symbol over here, GLD, Marinda. So if you want to buy a gold ETF, right, You just type GLD on the app. Thanks for the question. Thank you so much. So as I was saying, right now, if you go on TikTok and everyone is talking about, gold, beli emas, right? And then, we want to buy the gold. But the next question is, quite takut, man. Don't know where to store, right? And then if you buy the gold also, where do we put it in a FD box? Or no, you put it in a safe deposit box, or you put it somewhere, you hide it, So I think one of the best ways of doing this is to buy a gold ETF. This is where it will track the prices of gold, right? As I mentioned to you a while ago, right? This particular structure, right? So everyone put their money, and this is a trust. So what this trust will do, they will start buying gold, right? So every time when the gold prices goes up and goes down, this trust will appreciate, and you as shareholders would also benefit from this, right? The next ETF is this one is very popular. I keep talking about this QQQ, right? And this ETF for the past 5 years has been giving returns of about 14%. And how we want to buy equity ETFs, right? And how we want to make money from equity ETFs is that we are there for capital appreciation. Meaning to say, we buy low and sell high, right? And QQQ houses a lot of tech stocks. So this is where, if the tech sector is exploding, and if FANGs, FAANG, were to appreciate, like your Facebook, your Amazons, your Apple, this particular ETF would give you all of the stocks, right? And there's another ETF, right? So I kept talking about, ETF and how wonderful ETF. There is another ETF where you can actually short your asset. Short means you say, if the underlying asset is going up, right? Short means to say you expect something to turun. Every time when the harga turun, right, the short ETF will go up. So that means this is an inverse ETF. It will move opposite direction. So one of the reasons why I put QQQ over here, you can actually see the QQQ going up, right? So when you buy a short ETF, this will inverse. This will actually bet that if the market were to go up, this ETF were to go down. And if the market were to go down, this ETF were to go up, right? So this is an inverse ETF. And there's also different types of ETF. So I talked a little bit about this last week, right? I talked a little bit about the EV players, right? And one of the concerns I think some may have is, I like the EV sector, but I cannot buy a Tesla. Or I like the EV sector, but I don't know whether I should buy the small cap players, right? I think this is something you may want to consider, right? These ETFs actually buy EV listed companies. Okay, let me repeat this again. This ETF buy EV listed companies. So that means they will buy they will buy a little bit of Tesla, they'll buy a bit of Lucid, they'll buy a bit of NIO, they'll buy a lot of small stakes in all of these stocks, right? So assuming right now, if the EV sector is growing very rapidly, right? Notice how the ETF are doing. Basically, even though if you buy a company which, so over here, as I mentioned last week, there are some small cap companies which actually go up and go down, go up and go down. And a lot of small cap stocks does this, right? So one of my strategies for you today, which I want to share, right? I think this is the $100 slide now, is maybe consider to buy ETFs within sectors that are growing rapidly. And one of the sectors which are growing rapidly are the EV guys, as I mentioned last week. If you look at the ETFs, it's relatively attractive in terms of pricing. It's only $25 and $30 each, right? Another type of ETF. So these are called thematic ETFs, right? So that means these ETFs will just buy a bunch of EV vehicles, right? And then I'll show you another thematic which is happening right now, which is the AI industry right now, right? This is another theme which is exploding, right? So the first one on the top are called bots. This actually invests in robots, right? And also artificial intelligence, right? And then the next one, which I foresee another explosion in terms of growth, right, is cloud computing. As more and more people upload data on social media, as SaaS becomes more popular, as more and more software and also social media are all uploaded on the cloud, guess where everything has to be stored, right? It has to be stored somewhere in the cloud. And if more and more data is being stored in the cloud, the demand for these services would increase. And if the demand for these services increase, this is where we could see players like the Sky ETF would benefit, right? So I think the next question right now, right, is this lah, right? What's the difference between an ETF and also a mutual fund, right? So I'm sure a lot of people says, because if you look at the structure, right, a bunch of people putting money together, right, and this trust actually buys different type of assets, right? It sounds very similar to a mutual trust, where I don't know whether you guys imagine this with me, lah. If one day you go to a bank, right, and then and I'm sure you would have seen one person behind the counter, right? And this person is always nicely dressed. And as soon as they know that you have a little bit of money, they'll come to you and say, hey, would you like to buy mutual funds, right? So let me explain mutual funds in a very simplistic manner, right? Mutual funds are managed by fund managers. And mutual funds are active funds. So that means if you have a fund manager investing in your mutual fund, it's going to be a bit more expensive. So mutual funds is an active fund. ETF, however, is a passive fund. So ETF, they will actually buy those particular stocks in certain sectors, right? And maybe every quarter or every half yearly, they will change, right? You don't really need an expert for this. ETF is passively managed. So every half yearly, when they change the list, the ETF will also change, right? That means you don't really need experts and whatnot. Mutual funds, however, you have a fund manager. And that's one of the reasons why mutual funds, you have a fund management fee. And also you have an agent. Most times when you see banks, right, when they're trying to push a product, you will try to see them push mutual fund products. Why? Because the agent will get money and also the fund managers will get money. So that's where the money will actually go into, right? And ETF, however, we cut off all of this layer of fees, and it's so much cheaper for you. And when you start with a bit more money in your investment portfolio, right? This is where you can compound much further, much faster, because your starting line, you have a little bit more. So when you want to compare two and two, ETFs are more affordable and it will help you start with a little bit more money in your portfolio. Whereas mutual funds, some fees has to go to your agent. The person sitting in the bank trying to sell you the mutual fund, they will take a cut. And then after that, you'll also go to a fund manager, right? And over here, in our platform, we offer ETF, which will enable you to start on a very cheap manner in investing in stocks. So, okay, just a small little commercial break before we continue. Just right now, just a little thank you to I guess to the webinar and also all of us lah. We would like to maybe tell you guys, to maybe refer. If you guys want to sign up, please use this particular code, OMUS, OMUS 9790. OMUS 9790, right? So use this particular code, right? Just as a thank you, right? And another thing is that we have lowered our fees right now. So our fees is a lot more cheaper, right? Right now, per trade is as low as 199 minimum fee, right? Or 12% of overall transaction value, right? So not only, yeah, so you can actually, the fees are much lower right now, right? And also by buying ETFs, you cut down a lot of fees. Therefore, you will benefit, basically. And another thing is do join our Telegram group, right? So our Telegram group actually gives a lot of really amazing information on a daily basis. On a daily basis. Me and also my RAs will always update this lah. So like I said in the past couple of webinars, right? If you know that an earnings for a particular sector is moving up, right? This would mean that particular stock would tend to always move upwards, right? Or if we know that a company is already investing in machineries or improving the operations, right? This would mean better earnings in the future, right? But only if we actually trade very early on. This is where we position ourselves before the stock price moves up. So I think one of the benefits of joining our Telegram group is we try to put the latest information in the Telegram group. Okay, so I see a question, Ismadi. Okay, I'm going to answer that question, Ismadi. So just let me go through this particular slide, right? So I think one of the major benefits, right? One of the major benefits of ETF is this. Say, assuming, in fact, even me, right? This is a very personal example, right? When I first started investing, right? Especially in the US markets, right? As soon as I got a hold of the platform, I wanted to buy all of the best stocks in the United States. I wanted to buy Apple. I wanted to buy Netflix. I wanted to buy Google. I wanted to buy Tesla, right? But the whole thing of it all, if I were to buy all four of this, right, I think it came up to about 1,000 US dollars. It's very, very expensive, right? So I mean, you can see Netflix also is already 449, right? Tesla is about 250, right? And then these two is about Apple is about 200, and also Google is about 130, 140. So it's a bit on the pricey side, right? Right. So again, let me now break this down in a very simplistic way, right? Assuming right now we want to buy this, right? And then we just tong tong. You just ask me, hey, Adnan, I want to buy all these stocks. You want to tong tong with me? Tong tong means we want to kongsi, we want to share. So okay, I put another $200. And then person B says, okay, say maybe it's Madi puts another $200. And then Pat maybe puts $100. And then Marinda puts another 200. So what we can do is maybe investor 1, 2, and 3. We put all our money together in a small little trust, and then we can buy these small stocks, right? So by doing this, we can actually share and we can buy all of these stocks by putting this in a big tabong, right? That being said, the disadvantage is this, right? Assuming right now, there's no trust between person A, person B, and person C. So this whole thing cannot work, right? Or we don't, we don't trust each other, right? And then the second thing is maybe to find people which actually has that amount of money also very susah. So this is one of the reasons why an ETF is created. An ETF will enable you, all of these people, number 1, number 2, number 3, number 4, number 5, put all our money together, and then we will buy maybe 10% of Apple, 10% of Amazon, 10% of Tesla, so on and so forth. So an ETF will enable you to buy all of these wonderful stocks at a very, very affordable price, right? So that's the benefit of an ETF, right? And I think the advantage of buying an ETF is that it gives you diversification, right? So I think this holds true to me lah. During the whole pandemic, I also started investing, right? And I still remembered at that point in time, I was retired lah. Almost all of my money was actually in the stock market, right? And when stocks actually drop in value, right? Wow, a lot of anxiety, right? So assuming if a stock actually drops by 10% and you put all your retirement money there, right? Or all your money there, pretty much everything were to turun, right? But the benefit of an ETF is that it will give you, say, stock A, stock B, stock C, different stocks with different performance, right? And we can see in terms of the weightage, maybe 40% of stock A, 40% of stock B, and 20% of stock C, right? The benefit is that it will give you a nice averaged out return. So even though you have stocks that turun, an ETF would enable you to have a diversified portfolio, right? And as a beginner, it is so helpful, right? And as a beginner, we always make mistakes. And even me, when I first entered the US markets, I made whatever mistakes I can, and anyone can make, right? I probably made a lot of these mistakes, right? So as a beginner, we want to actually make money, right? At the same time, we want to actually have the gains from the US market. So that's one of the reasons why I keep suggesting ETFs, right? Right. So I think the disadvantage is this lah. Assuming if stock A were to appreciate by 50%, right? And then the weightage is about 40% of stock A, right? So that means you get a blended return, and the returns are much more less, you see. So it's like a double-edged sword. Diversification would enable you to actually cushion any of your losses, but also it will cushion any of your gains upwards. Assuming if you want to buy an amazing stock, right? But you buy it through an ETF, right? The stock actually performs really, really well, right? But the ETF actually also cushions the upside, right? So those are the pros and cons. Let me just do the questions real quick. Yeah, sorry. Okay. Anonymous attendee, great research done. Very easy, understanding, and comprehensive. Thank you so very much, anonymous attendee. That's why we do what we do. We want to make investing fun. We want to make it intuitive. We want to make it very relatable. Okay, Ismadi, right? How do you trade ETF, swing or long term? So for me, right, I am a long-term trader, right? So and because for me, how I actually trade, right, is as many of you guys know, right? I came from a investment banking background, and how I managed to I guess retire was actually I always focus on the long term. So every time when there is stocks which actually turun, right, drop, right, I just keep on buying and keep on buying, right? So yeah, I tend to do long-term investing, right? It worked out for me. And another example I like to give you guys, right, is ETF, right? Can you imagine EPF? Every year, they keep on giving dividends. On top, no, sorry, they keep on giving you guys the interest or dividends. And then their fund never drops in price. I mean, how amazing is that? And this year, they actually made a bumper profit. So that's a really good thing. How to pick long-term stocks. Okay, I will talk about all of this next week's webinar. This week is more about doing an introduction. So Ismadi, Mr. Fu Shilan. I will talk about this more on next week's webinar, right? We will, like I said, this week is more about introduction, right? I truly hope that you guys enjoyed this particular webinar. It took us maybe a whole 1 week to actually prepare all of this, right? So wait, what are the examples of growing sectors? Okay, I'm going to talk more about that also next week. But as a teaser, right? It's electric vehicles, right? And as you can see, right now, China is moving towards electric vehicles in a big way. Hence, you can see Tesla, their stock just flies like a rocket, right? Another one is also the AI. Right now, if you can see that ChatGPT is getting more and more mainstream, right? So we can see stocks like NVIDIA also skyrocketing, right? So we're going to talk a little bit more about this next week, right? So I can give you a bit more flavor on this, right? So I sincerely hope that you enjoyed this week's webinar as much as I enjoyed presenting it, right? With that, guys, stay invested. And if you have any questions, you can always ask the happiness agents. And with that, take care. And hopefully we all can make an amazing portfolio and amazing gains this year. With that, take care, guys. Good night.